Good evening, everyone. This is Srikanth Rajan, and welcome back to the Market Pulse podcast, where we discuss about what happened in the market and what could be expected in the upcoming week. So let us start off by looking at what happened last week. So what happened was really awesome because the markets were kind of stuck for some time, but then on Thursday, the expiry day, we could see market hitting a brand new record, going above 19,500, touching almost 19,550, and from there a fall that continued on Friday as well. But then the interesting part, in fact, in spite of the weakness on Thursday and Friday, we could see a big rally in the last half an hour on Friday. So the markets have actually closed really strong. But then, of course, it is still stuck in the same range of between 19,500 to 19,600. So it is kind of logged for some time, I would say. The kind of rally that was seen in the previous 2 weeks is not seen now. Of course, markets have rallied too much. But then, is that the end of the all-time high? I would say not really. But then, if you look at most of the media today, you look at any open damn media outside in the market, and every media would be talking about one simple thing, that markets are on a high, more rally coming up. This is how media is. When markets go slightly down, they start predicting all those major lows, which may not even be touched by market. But then, similarly, when the market goes higher, everybody wants to jump into the bandwagon. In fact, the interesting thing is, with all these hype around the market at this point of time, lot of people have started opening demat accounts, and the demat account opening has actually hit again record highs in India as of now. So this is how the general people are. What they do is they stay away from the market when the markets are bad and come back to the market only when they read about magic happening in the markets. But then this is not the right time to be investing big into the market, because this would only kind of probably, if at all the market corrects, that is when people lose money. But then this is exactly why we say only the people who stay invested in the market make money in the stock market. So the most important key to be successful in the stock market investment is nothing but to stay invested whether the markets are high or low. So if people ask me, should you stop investing into the market and start taking out profits? I would definitely not agree to it, because at this point of time, can anybody in the world predict whether the market will go up from here or down? Nobody in the world. If anybody could do that, they would be making big money in the market. Definitely not. So nobody in the world can ever predict that. So the best way to actually stay invested in equity is keep your investments the way it is, diversify properly, risk management, manage your risk properly, and that will take care of your money. In fact, that's exactly what we do at MPI Invest. We help you manage your risk in the investment space. That helps you grow your money in a more safer manner. So that's exactly what we do, and it's completely free of cost. But the only thing you need to do is contact us. Right? Well, so that was a little marketing for us in between. Forget it. Let us come back to the topic. So we were talking about the Indian markets. The markets have actually done really good. At this point of time, it's really in a confused stage, and every investor is in a confused stage at this point of time, thinking should we start booking profit or hold on. So this situation is not a great sign to be looking at. So there is something called as a risk to reward ratio. Here at this point of time, the risk and the reward looks almost same, which means it's not a great time to enter. Because if you enter, it is more of a lottery. If it goes up, you hit a lottery. If it goes down, you lose the money. So it is very important that those who are investing in SIP mode continue to stay invested. Those who are invested, and if at all, we never encourage leveraging your positions. If at all you have taken some money from somewhere and invested into it, then you'll have to please take your money out so that you clear off all your leverages. But as long as your positions are not leveraged, that means you're not taking any loan or any fund from anybody else to invest in the market, then you can just stay invested, is what I would say. Maximum what you can do is, if you want to be really safe, probably increase a little bit of debt instrument in your account based on your ability, risk taking ability, and then that should take care of. For example, if you want to go for a high risk, probably you can go for about 20% non-equity or debt instruments and 80% equity. And if you want to go with slightly lower risk, then probably 75-25. That is 25% to fixed returns and 75 to equity, and If you want to be really safe, probably then 50%, 50% each would do. So that could be the best thing that you should do, but never ever exit the market at this point of time. That's something I wanted to tell you. So apart from that, if you look at what happened last week, something really interesting happened in the IT sector. So this is something that we've been talking about for a really long time. So IT sector was one sector which was underperforming, and we were waiting for the results. So major results came in last week: HCL Tech, TCS, as well as Wipro. So now everybody had actually expected, if you remember what we had discussed in the last week's Market Pulse podcast, is that everybody had actually expected the markets to be, the IT sector to be doing bad, and the results they were expecting to be bad. But then, interestingly, the revenues have only grown, though the net profit has actually come down slightly, but it was actually better than expectation of the people in the IT sector. And that's exactly why we could see a big short covering rally in the IT sector. Almost every other stock in the stock market in the IT sector has actually gone up really well last week. So some of our favorites like Zensa Tech, I think in last 6 months has gone up by almost 110%, and it is still not yet on the all-time high. Similarly, if you look at TCS and Infosys, all of them have done really well. In fact, just to share this with you, myself and a few of our community members have actually invested heavily into Infosys and TCS at a lower price, and today all of us are sitting with some decent profit there. So overall, I would say all these IT companies are also looking like on a track to recovery. But then, since the result season started, it is actually keeping the markets kind of little wary on the different situations. Banking sector, which has kind of seen a big rally in the last few months, have kind of taken a backseat at this point of time. So what I am planning to do is at this point of time, PSU banks have actually rallied a bit too much. So I am kind of exiting my PSU bank, not exiting, I've reduced my PSU bank holding. And on the private bank front, I would say it's still okay. I would still continue to hold it. And NBFCs are also another sector which I continue to hold at this point of time. Apart from that, I am also heavily invested into IT sector. So with all this, I am expecting all these sectors to kind of do well in the upcoming time. Well, let me remind you, I am not a SEBI registered analyst, and I am not giving you a recommendation on investment. But then, of course, do your due diligence and research before investing into any of these. But then, if you want to stay sure of good investment returns, then there are amazing fund managers available through mutual funds and other instruments, which we can guide you to help you invest into the right product. So, of course, you can connect with us for that also. Apart from that, if you look at the market, so this week we would be again looking at some important data on the results again. So if you look at the important results coming up this week, tomorrow we have HDFC Bank coming up with results. So that's something very interesting to note how it would do. In fact, of late, HDFC Bank has not been performing because of the merger confusion. Now that the merger is over and the results are coming out tomorrow, there could be any big action movement coming on either side. But of course, I am expecting it to be positive on a longer term. That's exactly why I've kind of increased my stake in HDFC Bank. Apart from that, we have IndusInd Bank, Kotak Bank coming out with results this week. That would be a major thing to look at. But if you look at last week, Federal Bank and Bandhan Bank came out with results. Bandhan Bank results was not good. Not great, I would say, but then Federal Bank results were really good. So that kind of gave some support to market in terms of Bank Nifty. But then still, the big wigs are yet to come. So these are people who can actually decide about the Bank Nifty part. Apart from that, if you look at last week, we could also see some important data coming on the wholesale price index or the PPI in the US. So PPI has actually come much lower. The expectation of the market was 2.6%, but it has come down at year on year I'm talking about. So around 2.6% has come, but actual data came to 2.4%, which is 0.2% lower than expectation. Now this is a very important data for US because producer price index is like wholesale price index in India. That means at the wholesale level, the factory output level, the inflation has actually gone down slightly. So that is a great sign. That means automatically the customer price index or the consumer inflation data in the next month could be coming lower. Now with that, there were more positivity in the US scene, expecting the interest rates to kind of settle down. And Federal Reserve may kind of, like Federal Reserve has already told that they will be doing 2 more rate hikes. I personally feel probably they will be doing it, even though the things are looking good. But at least the confidence is coming in that probably they would stop at it. So it means probably by December, Federal Reserve might stop increasing the interest rates, and after that, probably the interest rates would stay stagnant for some time, and later there would be a situation where the interest rates will start coming down. So at that point of time is when we could expect the markets to see another leg of rally. But then at that time, Indian stock market will have another issue, that is the Indian elections. So that would be a major focus again coming in after Jan. So my expectation personally is that I am expecting the markets to kind of do well until November. Generally, that's Diwali time when we should see till then we should see some movement upwards, and from there probably some consolidation till the election results are done. Now, I would say again, I'm not talking politically out of this, but if there's a stable government and if at all the same government repeats, from a stock market point of view, that would be a very important strong strength in the market, and that could actually lead the markets much higher. Now, if at all it doesn't happen, if there's another government coming in there, still Indian growth story has a very strong impact, which is still there, which should continue, but probably at a slightly slower term, a slower pace. So that's something which could be expected. With all this, of course, this week will be dominated more by the results. So tomorrow, let's see how the HDFC Bank results can turn the market. Markets can turn anywhere based on HDFC results. So that could be a very important result to watch out for. Apart from the IndusInd Bank is also a good one. In fact, IndusInd Bank is another important bank which I am kind of invested and really happy about it. So expecting that also to do well. And my only piece of point I would like to make here is that at this point of time, private banks are looking more interesting than a PSU bank to me. Again, it's my personal view. It's up to you to do your due diligence before you take your plunge. So that's about it. So about this week, and now coming to the levels, important levels for this week, I am looking at a 19,300 as a good support. If at all 19,300 is broken, I would say 19,200 to 300 is a very important support for the market on the downside. And on the higher side, 19,600, 500 to 600 is important resistance. And the next higher level, I would say after 600, of course, there is no level on the higher side because the markets have never touched that side. So but personally, I'm expecting the market to kind of expire within 19,200 to 19,700 to 800 range on the higher side. So on the lower side, 19,200, and on the higher side, 19,700 to 800 is what I'm expecting the market to kind of expire for this week for a shorter term. But then, of course, like I always say, markets can never predict it, but you can only anticipate it, and that's exactly what I'm doing. So this is what I anticipate out of the market. And if things go well as per the anticipation, I would of course be sitting with some good profit on my trading positions. So that's it from my side for this week. Let me check if you have any questions. So if you have any questions, of course, you can post it in the chat box, or you can even put it in the chat comment section, and we'll be answering it in the next podcast. So that's it for now. This is Srikanth Rajan signing off, wishing you all a great week ahead. And for MPA family members, let us meet at 7:30 as usual for our meeting where we discuss about our investments and growing together. So goodbye. Wishing you a great week ahead. This is Srikanth signing off. But before we leave, do press the like button if you love the content that we share. And do share the podcast with your friends and relatives to help them learn and invest together with us. Goodbye.